All right, so most of you in the Discord are familiar with the previous day VWAP anchor strategy. It's something I lean on almost every single session, especially when the market isn't giving us a clear trend, and we have to rely on structure and order flow to find trades. Today, I want to walk you through a real setup I took, and more importantly, the reasoning behind it step by step. So price was grinding higher during the session, and we approached the second upper standard deviation of the previous day's anchored VWAP. Now, I wasn't seeing any clean rejection or big reversal at that level just yet, but what stood out to me was how price was stalling. There was buy delta coming in, meaning aggressive buyers were active, but they weren't getting paid. This is where I zoom into my 1-minute chart. I'm not just jumping in blindly off the higher time frame level. What I'm really hunting for is confirmation through order flow. Specifically, I'm watching for a few key things. Are buyers lifting the ask but price isn't advancing? Do I see absorption, where large resting offers keep refreshing? And is CVD starting to diverge, meaning buyers are getting active, but the pressure's not translating into higher prices? Once I started seeing that, a few candles with big positive delta but zero progress, that's my cue. It tells me either large sellers are absorbing or buyers are simply running out of strength. Either way, I'm no longer looking for a breakout. I'm looking to fade this strength. That's when I took the short. Now let's talk about risk, because this is where a lot of traders go wrong. This kind of setup isn't one you hold forever and hope it plays out. You're fading into a high, a potential exhaustion move, so the second you're wrong, you have to be out. My stop was just 5 points. Because if bulls suddenly get aggressive and push through that upper band, I don't want to be in the way. On the flip side, I was targeting 15 points. Why? Because when this setup works, it tends to work fast. You're catching a moment where the market's leaning long. Everyone's positioned for the breakout. And when it fails, you can get a sharp unwind as those trapped longs get forced out. The final piece of the puzzle was the CVD, which was now confirming everything. It started putting in lower lows, even as price held relatively flat near the highs. That's a classic signal of weakness. It means that despite all the buy pressure, there's no more gas in the tank. And sure enough, a few minutes later the bids disappeared, buyers backed off and price just flushed. That's exactly the kind of reaction I want from this setup. Clean, quick, and structured. This is why I always say, it's not just about the level, it's about what's happening at the level. Anyone can mark a VWAP or standard deviation, but if you're not reading how price behaves around it, you're basically trading blind. This trade worked because I had a strong structural level based on the previous day's VWAP anchor. I used order flow confirmation to spot trapped buyers. I managed risk tightly, knowing exactly where I'd be wrong. And I let the CVD divergence give me added conviction. That's the formula. Structure, confirmation, execution.